Well, I think commercial real estate, or the appetite for commercial real estate, is ever increasing. Globally, we saw something like $450 billion invested last year, and I think that's forecast by 2030 to go out to about $1 trillion. So commercial real estate, as part of anyone's overall portfolio, percentage-wise, is growing. And the reasons of that are quite clear. Sovereign bond spreads are at very low levels at the moment, and the gap between property yields and sovereign bond yields has been its highest, or its greatest, I should say, that it's ever seen. So property is playing an increasing part in portfolios for global investors moving forward. The issue is stock. We aren't seeing as much stock available in the prime markets. There's something like 800 million available in the West End currently, which is one of the lowest levels I've seen for some time. Set against that, we saw about 1 billion traded in the West End in the first quarter, and if you analyse that, that takes you out to about 4 billion. So set against broadly 6 billion, which was invested in 2012. So we could be seeing a market which is 20% down this year on where it was last year. Now, the appetite is still very, very strong indeed. We all know the reasons for that. I've talked about bond spreads and where property yields lie, but we're also seeing increasingly huge allocations coming in from markets such as Asia. Sterling's weakness is playing a big part in the appetite for London real estate, and we've seen on the back of what happened in Italy recently and in Cyprus that sterling is susceptible to movements in Eurozone issues, and that of course makes London real estate cheaper and therefore even more attractive from a pricing perspective. So there's no question over demand. It's still there. It's still very buoyant indeed. Our issue is going to be on supply. Now, why is supply going to be low this year? Because people want to hold on to central London. Central London, relative to other markets, is probably going to perform better. We've got rental growth coming through, albeit slowly. We've seen it in the TMT sector. General demand is increasing at a slow rate, but the rental performance of central London compared to, say, more regional markets in the UK is going to be better, and therefore, as a result, I think investors will probably want to hold on to West End and City because it'll outperform other markets in the UK.